I think it is beginning to turn heads. Bitcoin has gone up every year if you're using a 3-year moving average. It is a force that especially now that institutions have to consider it as a new asset class.
The future of finance is being reshaped before our eyes, and Cathie Wood is at the forefront of this transformation. With AI accelerating at an unprecedented pace, blockchain revolutionizing transactions, and Bitcoin proving itself as an undeniable force in global markets, we are witnessing a convergence of disruptive technologies unlike anything before. Cathie and her team at ARK Invest have been tracking these seismic shifts, and in her latest insights, she explains why institutions can no longer afford to ignore Bitcoin, why AI-driven economies will rely on decentralized finance, and how innovation is outpacing traditional market strategies. What does this mean for investors, global economies, and the very nature of money itself? Stay tuned as we break down Cathie Wood's bold predictions and the unstoppable forces shaping our financial future. If you want to stay ahead in this financial revolution, hit that like button, subscribe, and let us know in the comments. Do you think Bitcoin will become the foundation of the global economy?
Say, when we first put it in, we were kind of new to the business, and the most famous ETF publication of the time made fun of us saying, yeah, great marketing gimmick. And my answer to that was, great, they have no idea what this is. They have no idea. Anyway, yes, so we just put out earlier this month something called Big Ideas 2025. And we've become fascinated with the convergences among all of the technologies around which we have centered our research. So we've centered our research around the 5 major innovation platforms evolving today. So as you said, Anthony, robotics, energy storage, artificial intelligence, blockchain technology, and multi-omic sequencing in the life science space. AI, if you look at the convergence chart in that deck and compare it to the one we put in last year, what you see are the convergences are intensifying with AI really the heartbeat of convergence, pushing everything along and accelerating the pace of change, and also accelerating the deflationary undercurrents. And I know this is very controversial, but accelerating the deflationary undercurrents that we believe are going to intensify. Deflation, not bad deflation, good deflation. When you cut prices, you enable more access, right? So if you look at the convergence chart, we've focused, of course, on blockchain technologies and agentic AI. And I'm sure people have talked about this today, no?
No.
Oh, okay.
Teach us, Cathie.
All right. Have you heard of agentic AI? Yes?
Yes.
So I wish when I started ARK, I wish I had an agent who I could just say, I want to start this company, tell me what I need to do legally, operationally, marketing-wise, and you can do that today. And of course, DAOs, back in 2016, we heard distributed autonomous organizations. People were saying, that's crazy. And we were saying, no, there's something's going to happen that's going to enable this new world. And so the world we're moving into, let's say I start up my business and, my agents that I put on each of these tasks, has to facilitate payment, from one to the other. And however we structure the organization, it can't be done with fiat now, the way we're set up. It probably only can be done with blockchain technology and crypto assets of various types. And I know We have a lot of Bitcoin maxis here, and we're as maxi as they come in terms of where we think the ultimate value will reside in the entire ecosystem. But in terms of facilitating both personal agents, I hate shopping. I just want someone to dress me and, tell me what I look good in, or somebody else tell me what I look, and just have it happen. We're moving into that kind of world. And as we enable our agents to do more and more, giving them more information and freedom to do so, we're going to need peer-to-peer transactions, API to API payments in order to follow through on some of these autonomous organizations.
When I hear you talk, what I think about is Bitcoin is becoming this hurdle rate. It's becoming this kind of benchmark where you're talking is the ultimate, place where value will reside. How do you think about Bitcoin from a portfolio standpoint? If it continues to compound at 60% year after year after year after year, is every Wall Street investor just eventually have to throw their hands up and say, I can't beat this thing. I got to buy it. Like how does that play into an investment community that, billions of dollars is spent on salaries and offices and research and all this stuff, and Bitcoin just continues to outperform them?
So again, in Big Ideas 2025, I guess I'm promoting that quite a bit, but there is a page where we're talking to traditional financial services, and I don't know if you're referencing this, but we list the assets and their compound annual rate of return over the last 5 years, all of the major assets. And we put in there the Sharpe and Sortino ratio. So if you don't do quantitative analysis, modern portfolio theory, all of that, you're probably not going to care about that, but they do. And I think it is beginning to turn heads because, if you look at it's not even the 4-year moving average, which would capture the cycle, but the 3-year moving average. Bitcoin has gone up every year if you're using a 3-year moving average. And I think it's just becoming undeniable that it is a force that especially now that institutions have to consider it as a new asset class, because we've also put out there, I actually put it out in 2016, Bitcoin ringing the bell for a new asset class. We showed the correlations of returns. The correlations still, even though traditional investors are getting involved, the correlations with other assets still very low. It's absolutely essential that institutional asset allocators take a look at this asset. If they don't, they're not doing their fiduciary responsibility. So we're trying to help ease them, provide a bridge. Okay, we're talking your language. Bitcoin is not only a technology. It's not only one of the biggest ideas ever, the global monetary system, rules-based, digital, private, all of that. But it is a new asset class. And when you present investors with those three and they're not knowledgeable enough, it's a little bit threatening, or they feel a bit vulnerable. So we are trying to bridge in with, okay, we're going to talk your language. You need to look at this new asset class.
It's not operating in a vacuum. There is a global macro world. There is trade wars. We saw today Zelensky
did you see?
And Trump. I don't know if anyone has seen yet, but President Trump and Vice President Vance essentially, called Zelensky into the principal's office and in front of the media, told him, knock it off.
Took him to the woodshed. That's a good Reagan expression. Took him to the woodshed in front of all the world to see.
And so as that's happening, let's just say that there's maybe two major themes. There is the global macro world, which is global liquidity and interest rate and policy decisions and all that, overlaid with uncertainty maybe is the best way to do it, right? And I think that there's a lot of people blaming the recent price action on Bitcoin and all that on some of that uncertainty. But how do you see Bitcoin's future if we have a world where Doge is cutting government spending, if we have a world where these trade wars are playing out? Like how does your analysis of Bitcoin change?
And if we have a world, which we believe we've entered, where 5 major innovation platforms involving 15 technologies are converging and disrupting the entire traditional world order. Well, what in that world? Now, I'm very confident in our research and in our projections, but if I'm someone who doesn't do what I do all day long, and I'm studying all the ways to hedge against, all the uncertainties out there, ground shifting underneath us technologically, geopolitically. What is the one thing I am certain about? I am certain about 21 million units. I am certain about that. And there have been, for those of you, I don't know if we have an economics-oriented audience here, but Art Laffer actually helped us write that first white paper on Bitcoin. And he said, after he agreed to collaborate with us, and he said, this is what I have been waiting for since the US closed the gold window in 1971. He's been waiting, he's 85 now, I think. This has rejuvenated him. And he's proselytizing to the rest of the world, El Salvador, Suriname, he was in Argentina. And he's beginning to help them understand how important this source of certainty will be to them. And, one of the biggest things that has surprised us, when we were brainstorming about Bitcoin in the early days of ARK, our working assumption was that the early government adopters of Bitcoin would be in the emerging markets because they live in such a chaotic world that is, they are battered every now and then by the dollar's appreciation, and which, they've got a lot of dollar denominated debt. They run their countries on their own currency, and they're losing out constantly. So I've been very surprised that the U.S. really, yes, El Salvador was there, but the U.S. is leading the charge here, and I think it's going to serve us very well over time.